Hi, this is Amy with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 19th of May. Starting off with the FTSE 100, which is dithering just below the old March resistance there, around the 87.50 zone, in fact 87.42 to be precise, and below that got the risk of having to test that resistance line there from March, 85.80, but unless there is an end of day close actually below that line. Still on our way for 87.40 and potentially retesting the best levels of the year and beyond. Worst case at the moment is we've got to test that 50-day line 84.60, but at the moment we can't see whether that will happen or not on the basis that we haven't broken that resistance line. Moving along to the DAX, and here the situation is that we are still in higher territory than what we had back in March through 23,500. Above that, looking for the top of that rising trend channel from the early part of last year, 24,300, and hoping for that as soon as the end of this month. Here, the worst case is a move down towards the gap, the initial gap for this month, 22,600, but obviously not looking for anything lower than that at this stage. The Dow is next, and here a picture of a market just hitting that line there from February. That's around the obviously the Friday close, 42,600. We're guessing that by the performance of the FTSE that we're going to back off from that line, but we're still within the overall red rising trend channel based at 42,000. And while we're above that, we still have the upside potential, and obviously the potential of breaking 42,800, the March resistance, and heading up towards 44,000. Bitcoin is next, and here the dithering again, another dithering market, looking for a breakout yesterday, or from yesterday, through 105, but we come back down within that pesky bull flag that we've been in for most of this month. Top of the or rather the support of this flag, 101,000. So at least while we're above that, looking for the record highs around 109, and the top of that rising trend channel towards 120,000. What is exciting here from a technical point of view is the way that we are just a few days away from a golden cross between the 50 and 200 day moving averages, which hopefully that run up will be able to lift this market higher. Moving along to the situation at gold, and here the fear has been in the market that we're going lower, but so far market's been able to get out of jail by bouncing off the floor of the rising trend channel from March, and also the 50-day moving average 31.57. While we're above that combo, still looking for a resumption of the upside. 3,400, the initial target there at the resistance line from last month, and then obviously the best case 3,800, hopefully over the next month. Moving on to the stocks, and not that many today, which is slightly disappointing given it was a nice end to the week. But got one situation which looks quite enticing, which is Arecor Therapeutics, on the basis that we gapped down last month, and we've gapped up twice so far this month and pushed through the 50-day line above the latest gap there at 41 pence, looking for the top of the rising trend channel base at 55 pence by the end of next month, or even sooner than that. Stock I mentioned yesterday, which I think had some news last week, was ASA, and here we got this wide rising trend channel that's been in place since the end of 2023, and basically looking for the top of the channel there up to £2.20 by the end of next month, while we're above the late resistance of last week through the 138 pence level. Moving on to Capai, and here you can see that the shares still making progress within this rising trend channel, looking for 0.65 probably by the end of next month, but the way things are going, could get that by the end of this month, while we're on the right side of 0.45. Very impressive situation there, even though obviously in the last month or so it's been a 3 steps forward, 2 steps back type of price action. On to Cirata, which nobody seems to be talking about, which has delivered a really good turnaround here. We are now going level with the December peak there towards 39 pence. Above that, looking for the low 50s, a resistance line projection there from July last year, and looking for that by the end of next month or even sooner. It looks like a full-blooded turnaround for that stock. Moving along to Coinbase, or Coinsilium rather, which could be the next Coinbase. Here we've got a situation where had a fundraise last week. Shares remained above that great key reversal to the upside on Friday, which I've followed through today as well. The old target here was 5.5 pence, but we weren't that far off it today. 5.2 the high. Above that, looking for a June 2023 resistance line projection as high as 9 pence by the end of next month. So feeling quite chipper about that, especially while we're on the right side of 4 pence, which hopefully we can do. Moving on to Galileo, and here, picture that of a turnaround with a rising 50-day line near the low, so that will suggest that we could get it up to at least 1.1 pence on the top of that falling trend channel by the end of next month, while we remain above recent resistance at 0.85. Onto a stock which I don't cover very much, but hopefully we'll get a little bit more love. Here we've got Hostelworld, which I suppose, as well as heading for that red resistance line projection, is actually in a broadening triangle base. But the initial target here around £1.26, ultimately looking for 1.35 by the end of next month, which is basically post-November resistance for the shares. The key here is that we managed to have end-of-day closes above the 50-day moving average of £1.18, which may not be that easy given the price action so far today. Marechale is next, and here the picture is of a stock which is having another go at recovery. Obviously, we had that mysterious spike in January, which got sold into. In fact, the shares went back even lower, which is typical of the London market. At the moment, we've got a broadening triangle base. The target there, 1.88 pence. If we manage to get to that by the end of today, which we might actually do, the next level up for keen traders would be up to 2.4 pence. So we could have a repeat of what we saw back in January. The other point to note is that we want to stay above the 200-day line on end-of-day close basis, and whatever happens, stay above the 50-day line at 1.35. The reason for inclusion today is that we've had a sideways shuffle along a rising 50-day line, which tends to be the start of some of the more powerful rallies, as we actually saw back in January. So it looks like a repeat of that particular setup. On to Oriole, which was very excited about its own RNS last week, but market wasn't quite so impressed. The current situation is that we've got the shares in a falling trend channel that's been in place since the end of the summer. Initial target here would be 0.3 pence, hopefully by the end of this month, while we remain above the 50-day line there, 0.19, but a bit slower and a bit more disappointing on the turnaround there with the news than perhaps one would have expected. Staffline is next, and here we've hit our first target there at 34 pence, looking for the next level up, and that's already been mapped out at 46 pence or even 47 pence by the end of next month. The gap through the 50 and 200-day line is very impressive, and now we are well above the March resistance at 34 pence, so above that, feeling very positive. Finishing off with the Velocity Composites, and here, not much to go on, except the way that we've had an RSI 50 rebound, what I call a V-shaped bull flag at the 50-day moving average, and we gapped up and had a gap fill rebound, so a little bit of positivity there, enough to give us the hint. This is the turn of the range, and we could head back up to at least the old summer 2024 resistance in the mid-40s. Ideally, of course, we stay above the floor of the channel at 23 pence. That's it for me today. More updates tomorrow.